taxes are certainly at the forefront of everyone's minds when you get those checks and think about, okay, how much of this is really mine and how much of it am I going to have to turn over in the form of taxes. So here are some predictions on what you can expect. Certainly you can expect that there will likely be, there's no likely to it, there will be an increase in your income taxes because of these payments, because of this new wealth. There could also be some changes in your property taxes. You could lose CAUV eligibility if some of you are under that current agricultural use valuation, the differential assessment for agricultural land. If the surface is actually taken out of agricultural use and is going to be used for a development purpose, then you've now taken acres out of CAUV. So there will be a recoupment fee that will come along with that, as well as then an increase in the taxation on that land. So you'll likely see those changes if there's development on the surface. You could see capital gains taxes if you sell that mineral interest at some point in the future. You could see increases in estate taxes depending very much upon your own situation, but certainly the value of your estate will increase. So at least the level of concern about estate taxes will increase as well. I thought there was one more. Did it skip over that? Okay, we got all those, right? Okay, so certainly some, all right. It's hard to tell from here whether it's moving or not. Maybe I should run down here. So certainly some concerns, right, about taxes increasing generally. It did, that's right. Okay. I think this is some test Steve has given me to see if I can handle it. Is this some like candid camera thing or something? Okay. So let's think about how you can specifically address that first big issue, and that's income tax. Now, Dave's going to get into the details about what kinds of dollar signs you might be thinking about here for income taxes, but I want to talk about I have to constantly think, okay, is this where I was? I want to talk about some things that you can do that aid in that process, and again, might help protect your assets and minimize turning over those assets for other reasons like taxes. So the first thing is, let's make sure that there's accuracy in your royalty payment, and that's going to require a couple of things. Review that division order or that letter, that document that you received that clarifies what the company thinks your interest in this well is. Review it, make sure it's accurate. Second, as you receive those royalty checks, make sure you're reviewing those payment stubs and that you are being paid for the correct interest that you have, that there aren't deductions being taken out that weren't part of your lease agreement, whatever bits of items. And again, these become very individually tailored depending upon your situation, but review the royalty payment check stub every time you receive it. And keep those stubs as records. You're going to need those, and Dave will talk about those later when he talks about taxes. There are a number of logs that I've seen that have been developed by different professionals, accountants, attorneys, but they're developed for the royalty owner, and it is a log that forces you, encourages you to keep track of every bit of information, particularly where you have more than one parcel. Maybe it's simple enough just to keep the check stubs on one parcel. If you have a couple of different parcels, you're receiving a couple of different payments, I would advise you to have a log in which you enter all this information and can see exactly what's happening with your various property interests. Okay, then we go to, now Dave and I have had a little discussion about this today. He doesn't like this term that I use, but I do this intentionally because I think it makes a point. Tax avoidance strategies, which we've lost already. You prefer tax management strategies. It does sound a little more politically correct, but I think tax avoidance strategies makes the point that there are things that you can do to avoid paying the highest amount of tax. Those are legal things, they're legitimate things, they're certainly endorsed by the government. I'm not advising you to try to not pay your taxes. I'm just suggesting that you begin considering some of those mechanisms and strategies that will help you avoid paying more taxes than you should if you use everything that the law allows you to use. And some of those strategies can include the use of a business entity or several business entities, and these all come at various steps, not all right up front, various steps and for different purposes. But business entities, paying into a retirement plan, charitable contributions can be very valuable, where you may prefer, rather than paying that money through taxes, pay it to a charitable organization. And the government is completely fine with that, which is why the government allows that. Savings bonds, maybe a 1031 like-kind exchange is something that you may need to consider if there's going to be a sale of property interest. So something to start thinking about now for your situation is what are some of those strategies and how can I bring those